Andy Hoffman.
How are you?
Hey, I'm doing well. How are you?
I'm okay. Fighting through another frustrating week. Like yourself, we pour our heart into what we do, and it's just a lot.
Well, it's a lot to keep track of. I mean, have you ever, in all your years of covering this type of news, have you ever seen such epic events unfolding as quickly as they have over the past week?
The horrible headlines, as I call them, they're taking up so much of my writing because I have to let people know about all the things going on as opposed to the big picture stories. There's just so many of them.
Yeah. Well, you know what, Andy? There's so much to talk about. I want to talk about your recent article, "The Dominoes Are Starting to Fall." And I got to quote you at least in one area of that piece. It's a brilliant documentation of events, and that's what I'm trying to do every week. We're now doing a weekly update, a news brief, trying to document the collapse. Let me ask you about this London silver fix. What was your reaction to this news that, quote unquote, the London silver fix is dead, effective August 14th? Is that as epic an event as many are saying it is, or will the manipulation just continue in some other way, derivatives and whatever other electronic nonsense they throw at the market?
Well, it's funny you picked that particular topic because honestly, I wasn't even really aware much of the London silver fix. I mean, clearly, if they have a gold fix, the presumption is they had a silver fix as well. And now that it's gone, it was like we hardly knew you. But look, we know what's going on with the London gold fix, in which Deutsche Bank basically just resigned its seat after they and the other four partners in it were accused of fixing the fix. And so it goes to show that if it's happening in gold, that clearly there's smoke behind the screens going on in the silver market as well.
Yeah, I want to quote this from our friends over at Investment Research Dynamics. Supplementing what you just said about Deutsche Bank, they write, quote, "Recall that Deutsche Bank recently gave up its seat on the price fix committees of gold and silver after trying hard to find a buyer for the position, and no bank wanted the seat because they all know that it comes with billions in potential liability," end quote. You know, the jig is up. We've been saying it for a long time, Andy, and that leads us into your article. The dominoes are starting to fall, and it's very evident for those with the eyes to see. This is what a collapse looks like.
Right, and when we go back to the London gold fix, remember Rothschilds, who started the whole London gold fix 100 years ago
Yeah,
or so.
1919. That's right.
Yeah, they left that position maybe 5 or 7 years ago, presumably because they were smart enough to know, why do you want to be in charge of being short of something that's in a bull market, something that Deutsche Bank didn't learn. And by the way, from reading the Spectacular, I wrote a piece called Spectacular Analysis this week because our good friend Dimitri Speck wrote a book about the Gold Cartel, which I'm reading presently. And he talks about how the London gold fix came around. Deutsche Bank was basically had predecessor firms that started the London Gold Fix with Rothschilds. So they've been in this gold rigging game since the beginning. And the funny part, of course, is that the focus on the gold fix is, according to the mainstream media, on the actual fixing of the price and the trading around that, when the real fix is the fact that on a 24/7 basis, the price of gold is suppressed. The London Gold Fix is only a small part of it.
Yeah, that's right. And, being no huge fan of Jeffrey Christian, either of us, I do want to just mention his name because he did an interview about this silver fix with Kitco. And he actually said, in relation to this idea of the silver fix ending, that one idea, quote, is to develop a sort of computerized fix, end quote. It should come as no shock that the powers that be will try in earnest to continue to cap the prices of silver and gold. And I just want to make the point for our listeners, Andy, that even though Zero Hedge led with the title, "The Beginning of the End of Precious Metals Manipulation," the truth of the matter is, although it will now, I think, be harder for the powers that be, they're still going to try like hell to cap the prices of silver and gold because they have to. They have no other choice. Do you
Yeah.
agree with that analysis?
Well, of course. I mean, the fix itself, as I said, is immaterial. I mean, let's say they were fixing the price slightly higher or lower than it should be. I mean, who frickin' cares? The real issue is that on a 24/7 basis, the price is being attacked, and the number one key attack time is after the PM fix, when the physical market's closed for the day. Look, everything's going computerized. I mean, what yet again Jeffrey Christian said, a completely useless statement. Look, I worked at Cantor Fitzgerald back in the early to mid '90s, and we traded bonds on a pit where we screen buy and sell. Well, guess what? They do it now by computers, and the fix is no different. The point is you can fix a computerized fix as well. I mean, what do you think high frequency trading is? So
Exactly.
there's no difference in the modus operandi. They're just not going to do this archaic fix anymore. It's really a non-issue as far as I'm concerned.
The fix is in, and until they let the free market decide the prices of silver and gold, which Christian made evident in this Kitco interview that they will not, there is absolutely no way that the market will be allowed to decide. But he was asked by the interviewer, how did this event come upon us so quickly, and was he surprised? And he said, quote, what's happening is as the banks continue to suffer, and in the case of Deutsche Bank, get out of the market, they simply said, we don't have time to do this in a leisurely fashion. We're gone. And so that's really what happened, end quote. I'm stunned by the fact that they did this in such a sloppy public manner. It's a very embarrassing
Oh, yeah.
way for this to have unfolded for these criminal banks, I think.
Well, keep in mind this. I mean, this is off the topic even of manipulation. The fact remains that the trading desks at banks are not making as much money anymore. Yes, they're still profitable every day because of the insider information, the high frequency trading, and their partnership with the government. But the fact is that markets, because of the lack of volatility that's been caused by years and years of manipulation, as exemplified by the Japanese government bond, which didn't trade for a full 36 hours a couple of weeks ago. They're just not. There's no money to be made, and now that the cartel has been trying to manage the price of gold and silver in such tight ranges, like 1,300 for gold, 20 for silver. I mean, on top of the fact that they could be that they have the whole world looking at them for manipulation, it's just not profitable anymore to do so. And the net of the end of the fix is simply just more attention on the fact that these too big to fail banks have their hands in every pie, and that they are in fact manipulating markets.
Yeah. What I love about it is that now there is absolutely no more wiggle room for those who would mock the idea of precious metals manipulation, who want to slam GATA, who want to say that we're all tinfoil hat wearing conspiracy theorists. There's no more room for that because it's absolute nonsense. It's perfectly clear and 100% evident and provable, quantifiably so, by any measure. When they have something called the London Gold Fix, they are fixing the price, which is exactly what Jeffrey Christian says needs to continue by some way, shape, or form in this interview with Kitco. The fact of the matter is that these prices in silver and gold are where they are. And by all accounts, with the monetary printing that's been going on for the past, since 2008, are lower than they should be because of the price fix. So where does that leave us in terms of silver at 20, Andy? I mean, it's like stepping in the Wayback Machine because everything else priced in $1980 is much, much higher than it was in 1980, and here we are with silver at 20.
Yeah, well, they're still out there denigrating. I mean, obviously, there's less people that are saying the tinfoil hat thing, but still, the large majority of the mainstream just wants the status quo to continue. Of course, most of the mainstream is no longer benefiting from the status quo because the stock market rising and real estate rising is now benefit only the 1% that get the free money from the Fed. So more and more, you're seeing mainstream articles about the fixing of markets, about what's wrong with the government and the Fed. Even, I look at every other day, Yahoo Finance, Bloomberg, Reuters, they all have articles which are not cheerleading the economy and the market. So it's a good sign, but it's only a start. And of course, you're never going to see widespread acceptance of what's really going on until the game ends. I mean, that's the nature of it. And then we will be reviled for having been right all the while. I mean, we've been watching this now for 13 years. People hated me for saying the stock market would crash in 2000 and that the housing would crash in 2007 and all these other things. But, we are the people listening to this are the people who are in the real 1% that are going to survive all of this in the end, and that's all that matters. And as for the prices of the metals themselves, you're referring to silver, of course. I mean, they have done their job in pushing the price down. The problem is you can't push the price down much lower than this because it's trading well below the cost of production. And again, the price of silver first hit $20. I'm not including the 70s in 2008, 6 years ago. Since then, the U.S. alone has added 8 trillion in debt, plus the Fannie Mae and Freddie Mac 5 trillion in the unfunded liabilities, and the labor participation rate has collapsed, and the food stamps has exploded, and there's wars everywhere, and currencies collapsing, and and the bailouts of Europe and Abenomics. So look, clearly it's being held here out of abject fear, and what's going on. While the effect, the ramifications of doing this has been massive inflation worldwide, and all these issues we're talking about. If the fact that you can buy silver at under $20 an ounce when mining companies literally can't even report a net profit unless the price is over 25, and sustain the business long term unless it's over 30 or so, is it's another reason to own silver, which has nothing to do with the monetary issues. So again, I put as much as possible of my savings into gold and silver. I'm not investing in them. I am saving my net worth in something that I know in time will see its full value.
Yeah, and I was reading Bill Holter's piece today, and he was talking about being accused of being a doom and gloomer, both in email from acquaintances, from people who read his material, saying, "Can't you ever talk about any good news?" And I just want to now circle back and come full circle with your piece. The dominoes are starting to fall, and I want to read just a few passages from that because this is why those people accuse those of us who are sharing the real news, as painful as it may be, as being doom and gloomers. If this is why they feel that way. You wrote, when the global financial system permanently broke in 2008, Washington and Wall Street, in their implicit, ironic roles as economic leaders, launched the most maniacal global reflation program in history. Now I'm going to jump down. Unfortunately, by 2011, when the U.S. was stripped of its undeserved AAA credit rating, you go on to write that it was clear that these trillions were getting the powers that be nowhere, and then you conclude market manipulation was dramatically increased, for the most part covertly. An unprecedented Goebbels-esque campaign of global economic recovery was launched. Well, here we sit in 2014, and the global economy is unquestionably at its low point. Andy, the point is that you hit the nail on the head. The people that accuse us of being doom and gloomers when all we are trying to do is prepare people and get them willing to prepare and to think about the facts, they've been hit over the head with Goebbels-esque propaganda, and they don't recognize it. They cannot recognize truth as you and I and Bill Holter want to share it.
And the good news is that people are starting to realize that. I don't really think most people even look at the markets anymore. But more importantly, I mean, what I wrote about last week, I think it was about the most important thing I've discussed in a while. In fact, the piece that I wrote, I think it was January 10th, called 3.0% Enough Said, was I considered my most important piece of the year,
Yeah.
where I said the Fed will never let the 10-year rate go above 3% because it'll implode the economy. And if they have to, they'll just put out the worst possible economic data or whatever they can do to get the yield down. Now, ironically, I just wrote last week
2.6.
2.6%
Yep.
Enough Said, and followed it up with the most damning proof yet of QE failure. Because what's clearly happening now is, despite all their efforts to try to jawbone the economy higher and try to make people think that because they're tapering, there's this big recovery. The fact is that the data doesn't support it. The economy is falling apart, and no one's buying this BS about the weather. So right now, what you're seeing is interest rates actually plunging below multi-month lows, because the market is clearly betting that the Fed is going to not only stop, quote, tapering, but to actually increase the QE, which is what we predicted all along. And in fact, last year I quantitatively proved that the Fed was not tapering. And obviously, when we started to see in the first quarter this mysterious Belgium buyer buying $200 billion of treasuries, or
Right.
80% of its GDP, we knew they still were not tapering. But now I'm telling you, they are in fact tapering. In fact, they're not only tapering now, I guarantee you they are selling hand over fist treasuries, because they were so terrified that the 10-year rate would fall below this massive year-long support level at 2.6, which was created when they initially announced tapering. And here we are a day later at 2.5, which is where they're protecting it today. So I think the whole game of pretending, of trying to make this, as you say, Goebbels-esque propaganda that we're in a recovery is dying. And you know what? It's dying in Europe too, where the GDP was just 0.2% for the last quarter. And by the way, the best performer was Germany at 0.8%, which just announced yesterday that its investor expectations fell from 43 last month to 33 this month. So that's why we all know that Draghi is going to be lowering rates maybe to negative in the next quarter, and then in June at the June meeting. And then, of course, is Abenomics, which is literally falling off the cliff, and they're supporting the Nikkei at 14,000, just like the Fed has been supporting the 2.6 10-year rate. And you'll watch the Nikkei collapse, and you'll watch them increase Abenomics as well.
Yeah, I read that entire piece and I actually printed it out. The Fed appears to be in an awfully tight box. They need to defend 2.6 and they can't let rates rise over 3.0. How long can they keep this up? I mean, it seems like they are in a box and I don't think there's any way out of it.
Well, they lost the 2.6 on Wednesday, and they lost 2.5 on Thursday. I wrote about the mysterious spikes upward that we keep seeing. Like we saw three times today, and here we are back at 2.5. And I said, it's no different than what Fannie Mae and Lehman stock looked like back in 2008. Every time they looked like they were going to collapse, they would suddenly rocket higher and then they'd fall again. It's no different than gold when they're defending it at 1300. Every time for the last 10 months now, it hit 1300. It suddenly plunges below it. That's just them there. They are so desperate. But in the case of gold, there's a physical market out there that they can't deny. And the same with silver. I mean, we look at the U.S. Mint rationing 1.8 ounces per month. The U.S. Mint is on a pace to sell 35% more silver eagles than last year's record level. And last year, the price plunged, and this year, the price is flat. It shows you that there's massive physical buying at these levels. And by the way, working for one of the biggest bullion dealers in America, which has been very slow lately, I can tell you that buying unequivocally is coming from China, from India, from Russia. Heck, I got an email from one of my readers today who had put in an order for Silver Eagles, and he was in Europe. So clearly, it's all in Europe right now. I'm sorry, it's all overseas, and eventually it's going to come back here to the States, just like it did in 2008 and 2011.
Hey, let's circle back to that mysterious buyer of bonds there in Belgium. We posted a chart at SGT Report just the other day showing the precipitous fall of treasury holdings by the Russian government. They're selling bonds, the Belgian buyer's stepping up, a mysterious Belgian buyer. Is there any way that you believe that that buyer isn't the Fed?
It is absolutely the Fed. Look, if you go back, I'm going to say to 2005 to 7, around that time. Now, of course, we weren't in a crisis at that time, but it's the same thing. Debt is going up, and out of the blue, a new category came up called Caribbean banking centers. And all of a sudden, from nothing, they bought hundreds of billions of treasury bonds and became the third largest holder after China and Japan. Now, as you know, Caribbean banking centers means offshore hedge funds. So there was no doubt in my mind that this was kind of a slush fund for the Fed and whatever they were doing down there to sop up some kind of supply. And then at various times during the crisis, 08, 09, 10, you saw the UK all of a sudden buying treasury bonds. And yes, the UK is bigger than Belgium, but there was no way with their fiscal problems that they were buying treasury bonds. But the coup de grace, of course, is Belgium, because I mean, Belgium is literally a tiny nothing country. I put it in my piece yesterday or 2 days ago to show you how ridiculous it is that they bought theoretically $220 billion of treasuries, literally just since the Fed started tapering. China owns 1.1 or 1.2 trillion of treasuries, and so does Japan. But that represents for them 12% and 18% of their respective GDPs. For Belgium, it's 80% of GDP, and we're in a major recession in Europe. So clearly it's not them. And, the fact that Belgium, oh yeah, happens to be the seat of the European Union, probably where the ECB gets its orders from, makes it even more blatant. It's almost like they're telling us, kind of like the Bank of Japan telling us through Abenomics, we will buy every bond out there. It's like them telling us, trust me, we will work with our partners to make sure you can't get that rates won't go up. The problem is, ironically, that just a month or two later, they're defending interest rates on the downside because they're scared that the market is calling out their tapering and calling for more QE.
Right. This is such three-dimensional chess that it gets difficult even for educated people that follow it to really get inside baseball and dissect what's going on. Let me ask you this, in your educated opinion, what is going on behind closed doors at the Fed? They must be freaking out, for lack of a better phrase, because their games, their manipulation, their propaganda is no longer working. And if they are actively the buyer of last resort, and they are literally buying tens of billions of bonds as the buyer of last resort, they are saving us all right now from the dollar collapse, which should otherwise be upon us. They are saving us from economic Armageddon right now, and they're still giving us all some time to prepare by being this buyer of last resort. I just wonder when the dominoes finally collapse, when the whole house of cards comes down. It has to be getting close.
Well, I don't go for the Fed's doing us a favor, just like over the years, old people saying, well, the cartel, it's great because they're enabling you to buy more. And it's like, it's not a matter of buying more. With every successive dollar that's printed and every successive secret loan and swap to European banks, they're only making the end game for the entire population that much worse and separating making the wealth inequality of the 1% versus the 99% that much worse.
Right.
But yes, theoretically, of course, if they stop buying today, the game would end. If the PPT stopped supporting the stock market, if the cartel stopped naked shorting gold. But look, I go back to this book called The Gold Cartel by Dimitri Speck, where he's going back over the various quotes of the Fed going back to the 60s and 70s and 80s about how they clearly had been cognizant of gold's competition with the dollar forever. And it's no different today. What's going on in the Fed right now is they are waking up every day in playing defense mode. It's nothing more than that. They're not geniuses. They're not talking with Chinese bankers. They literally are saying, what should we do next to delay, to kick the can the next bit? And, one day we'll protect 3% with every ounce of our might. We will put out every piece of propaganda that will get the rate down. And then, oh my God, we got to protect 2.6%. And oh my God, the stock market, the small caps are falling in the stock market. We got to protect the NASDAQ. And I mean, that's basically how they work. There's no doubt in my mind it's any simple as that. These guys are not geniuses. They do know, they're very well aware of the levers that they have. They know how the derivatives desks work at Goldman Sachs and their partners. They know how they can do secret swaps with the ECB and how to coordinate certain interventions. But for the most part, they are waking up every day playing defense. And guess what? Every Fed before that has done that, and every Fed has lost their machinations, their manipulations. And this one is failing more spectacularly than ever. And it's, now, as you said, the dominoes are going down. Japan is dead and buried. China is starting to go down. The European, as I call it, Draghi's reckoning day is going to start in June. And the real, as I say, coup de grace is going to be when Whirlybird Janet, sometime later this year, says, up, no more of this tapering BS, and turns tail.
Well, I agree with you that the powers that be are not geniuses and, in fact, are extremely power mad and corrupt and clumsy. And I don't think there's a better instance of a recent example of that than this news that Joe Biden's son, Hunter Biden, is going to be seated like a prince on the board of the largest gas production company in Ukraine. The news was stunning, and then a day later, I learned that it's even worse than that. A family friend of John Kerry's will also be on that board. When journalists pressed the State Department for a statement on this, and if they were troubled at all by it as being a conflict of interest, they were greeted with the response that, well, no, we have no problem with this. In Russia, there are oligarchs. In the United States, we have private citizens. Well, I made the note in this latest news update, Andy, that these private citizens benefit from the backing of Blackwater-style mercenaries, NATO, and a power-hungry Pentagon. So they're private citizens, perhaps, but they have a lot more power than you and I, and they certainly don't represent us. And they're making this country look damn foolish.
Well, that you're making the point exactly of just how dumb these guys are. Powerful, yes. Smart, no. The fact that Biden, the vice president, and of course Kerry, who spends his whole time attacking, Russia and getting in the middle of this, that they would be stupid enough from a PR standpoint to allow themselves to get involved in the greatest conflict of interest imaginable, just shows how unbelievably dumb they are. and it just reduces the credibility further. When you see Vladimir Putin mocking us for our stupidity, and the Chinese government mocking us for our imperialism and our aggressiveness, it just shows that more and more of the world realize that there's no single power in the world that has the right or the ability to have such hegemony, and that in the case of the United States and its cronies in London, that we've worn out our welcome. It's time for a new regime. We've destroyed the dollar. We've destroyed our relationships with the world, and of course, they've helped to destroy all the currencies of the world by exporting inflation. So, look, it's only a matter of time. Bill Holter talks about this big May 20th meeting. That's Tuesday between Putin and Jinping of China, where they're going to sign this Holy Grail gas agreement and talk about de-dollarization. I mean, does something come from that? I don't know, but something is going to give at some point soon when you see the overall deterioration of social, political, and economic regime.
Yeah, something's got to give, and unfortunately, it's probably going to be the dollar. Well, before we let you go, I just want to talk inflation and hyperinflation just briefly. Our friend Michael Snyder was out recently with an article on meat prices soaring. California is in an epic state of drought, almost biblical in proportions. It's quite horrifying to anybody paying attention, and what that's going to mean, because California really is America's breadbasket to a large degree, is it's going to mean inflation in food. It's already happening with chicken breast prices up 12% in just the last year, Andy. It gets awfully darn scary. So we are seeing inflation hit in the United States, but you've long said that you believe the first modern Western nation to reach hyperinflation will be Japan. Do you still see that as being the case?
Well, yes, absolutely. Japan is so far along the line because of their demographics. They're the oldest nation in the world. They're 10 years older than everyone else. That's why their fiat crash happened 10 years earlier, and that's why they have 10 years more of debt. They are at the debt levels that we will be at in 10 years if the system made it that long, which it won't. So, yes, I believe firmly that Japan is going to collapse far before anyone else. But when we talk about the inflation, which, as I have a piece called "The Most Important Reason to Own Precious Metals," which is food inflation, and I wrote yesterday about the food inflation. I wrote a piece a while ago called "Inflation in Arab Spring," and Chris Martinson just wrote a piece the other day talking about how the nations that spend the most on food are the ones that have the most social unrest and issues. And here it's going to happen as well. It's not just meat that's up. The average, the U.S. food price index is up an astonishing 23% just in the last 4 months alone. And of
Jeez.
course, part of that is due to the California droughts, and part of it is due to the Brazilian droughts, and part of it is due to the money printing, and part of it is due to a whole bunch of other things that we don't know about, the taxes, the socialism, you name it. But the fact is, California in particular, and I wrote a piece called California Inflation a few months ago to discuss just how third world California is becoming from a cost perspective, is going to sweep across the nation in the coming months. I just spoke the other day of Safeway, the nation's second largest supermarket chain, which just reported massive losses in the first quarter and said we've been eating a lot of our cost increases and now we're going to pass them through. I showed an interview with the CEO of Landry's, which is one of the largest restaurant chains in the nation, and it was so alarming in that he said we're being hit by food costs across the board, not to mention the minimum wage increase. And there's going to be major pass through of food prices across the board to our customers. So again, I mean, inflation is raging. Heck, even the PPI was up huge the last 2 months. Even Walmart cited the same thing the other day when it missed earnings and reduced its earnings estimate. So again, they can talk all they want about deflation, but there's nothing deflating in the world of things that we, as I say, need versus want.
It's just terrifying. Did you say food prices are up 24% in just the last 4 months?
Yes, the CRB foodstuffs index is up 23%
23.
since
Okay.
February,
Yeah,
and that's across the board. Chicken, beef, milk, shrimp, a lot of vegetables across the board.
It's stunning and it's terrifying. I got to tell you, Andy, my wife works in a professional capacity and so do I. We're both employed, so we can weather some of this, but my heart just really goes out to those who don't have jobs. We now know that 1 in 4 American families has no one in it working. And there are so many people on the bubble with 49 million people on food stamps that, your heart just goes out to the people in this country that are already suffering. And we know how much worse it's going to get, which is why you and I have been talking about these things for years now. And boy, the hour is really getting late at this point.
It is. And again, the beauty of it is for people who are, quote, scared, is that, as I said, they've done their damage. Yeah, you'll get Goldman Sachs telling you gold's going to 1,000, and, fear mongers who, are trying to sell subscriptions or scare you out of the sector. The fact is, we're at the point now where the mining industry, if it's not dead, it's on its deathbed. And frankly, I would bet that production will never recover. And I say never recover from these levels, from the capex damage, from the increased costs of business, and of course, from what the cartel has done. Of course, once the prices do rise, they're never, they're going to be expropriated. So the fact is, there is just no way that the price can go significantly lower for gold or silver without literally putting the mining industry out of business completely, at which level the prices would explode higher.
Yeah,
I
that's
mean, there's a reason why a year ago, Newmont and Barrick, the two largest miners in the world, cut 35% of their staff. And now that every single day they're begging each other to merge because they need to cut costs so dramatically. CapEx is down over 50% in this sector. Production peaked. It's not going up anymore. And as for, just in the United States where they need to buy all this gold and silver for eagles, I mean, silver production in the States, I think, is down 60% in the last few years, and the same with Canada.
yeah.
Production ain't coming back.
Silver production in Canada is down 41% just in 2014. It's just a stunning world in which we live, and it gets real scary. I guess the bottom line, Andy, is people obviously now know that the dollars in their pocket, there will be no shortage of. There will be no mining slowdown in the production of the fiat dollar coming off the fiat money master's printing machine. And there's going to be plenty of those. But physical silver and gold in physical form will only become more and more increasingly rare, and it's already very rare. If we could get the paper market cleaned up, the billions and billions of paper crap they throw, if we could get rid of those, then we would really know what 1 ounce of silver and 1 ounce of physical gold is truly worth, and that day will soon come.
Well, of course, the manipulations. I put out an article a few months ago showing how the price has been controlled or suppressed for literally 1,000 years in one shape or form, but every single time it fails, and that goes for the London Gold Pool or the 1970s or the 1980s or what's going on right now. It's always the same. Real money always wins. And when you start to see debt increasing, not geometrically, but parabolically, as it's doing now on a global basis, the end game is near, because the central banks just have no more ammo to kick the can much longer.
Well, they've got their printing presses, but they've lost their credibility, so the con game is up. The confidence game is up. Guys, I've known Andy Hoffman and David Scheckman and Andy Scheckman and Bill Holter for a few years now, and they're good guys, they're honorable guys, and if you want to exchange some of your fiat money for real money, give Andy and the guys at Miles Franklin a call. Andy, can you give us that phone number?
Sure, 800-822-8080. Remember, we're in our 25th year of business, which says something in this very difficult world. And of course, if you want to ask me a question personally, ahoffman@milesfranklin.com.
Our guest has been Andy Hoffman from Miles Franklin. Andy, thanks so much for your time. As always, we really appreciate it.
Pleasure. Thank you.
Thanks, Andy.